Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to look at how we can move standard traders that just use the STF color. The STF is our indicator down the bottom here. Just using the STF color to help determine the larger degree trend to using the larger degree chart. So in other words, when I'm on a 3-minute chart, the larger degree trend would be approximately 5 periods higher, which is the 15-minute chart. And I want to show you the difference between this and, as such, how traders move from standard MTPredictor traders to becoming more advanced. And as you can see, it will help results immensely. So let's look at the YM, the 3-minute YM for yesterday, and just have a look at the standard trade setups using the STF color as a trend filter. Remember, the STF does a good job of monitoring the trend most of the time. However, when you get a big gap up like this, or at other times when the trend changes, all indicators, this is true for every technical analysis indicator there is in the book, they'll always be behind because they're what's called lagging. So if we have a look at the results for yesterday, whoops, if I just zoom in, you can see we had a history triangle here. You'll know that history triangles are setups that were filled and then failed. You put the analysis on so you can see whether it would have been stopped out for a loss. So here you would have had a -1R loss. Here we had a TS3 setup that again came down to this point here and would have been a -1R loss. You had an opportunity to do another long trade here, but you would not have done it because you were already in this existing trade. So far you'd have been -2R down. You then had a sell setup here. If we actually look at the color of the STF is black at this point, so this would be a valid sell setup. Again, this would have been stopped out for a -1R loss. So far you'd be -3R down. Now the TS4 sell at the end of the day came in here. So if I get my mouse working, came in here and came down to just about the first target for a potential 2.5R profit. But let's say you just missed that, and let's put the risk reward on now just to do a slightly worse case scenario. Again, there's very few vendors will do this, and let's say you made a 1.7R profit. So overall, standard traders here would have been -3R plus 1.7 or -1.3R down for the day. Now that's not too bad because as we know, keeping the risks small and under control is what professional trading is all about. But what I want to show you in this video is the difference it can make by looking at the 15-minute chart to use our DP and WPT tools, which are leading indicators, to then gauge a trend or large degree trend direction. Remember, standard traders are simply using the STF color, which again is right most of the time, but will only be lagging when you get just after a change in trend. So let's move to the 15-minute chart. Let's scroll back to before yesterday opened, and as you can see here, we actually had some trade setups on the 15-minute chart, but that's not what we're looking at. Here you can see we had an important pivot back here. So let's put the DP on, which again is advanced chart analysis, decision point, choose swing high or low, and then we click on this pivot. Very easy indeed, and as you can see, this level is then placed on the chart before you, on the chart for you, and before the market gets there. In other words, it's in advance. It's not like most technical indicators that are lagging. It's a leading indicator. So let's see what happened. Well, yesterday the market opened, gapped right up, and actually hit this target. If I scroll forward, you can see that this actually nailed the very high of the day for you, and the market yesterday was declining the rest of the day. And in fact, here you can see we actually opened down, so the trend is actually still continuing down into today. But the point being is that we knew this level was on our charts in advance before yesterday even opened. So how can we make use of this? Well, as the market went up into this level and backed off, we now know we were at 15-minute resistance. Therefore, the likelihood of the market carrying on going up on the 3-minute chart was less. In other words, we were anticipating the market was going to go down, in other words, decline off our 15-minute resistance. So let's go back to our 3-minute chart and see what difference that makes. So remember, we know that this high here was at 15-minute resistance. So in other words, larger degree resistance. So the question being is, if we knew that, and again that was on the chart before the market even opened, the question being is, for the advanced trader, how would you have considered these buy setups knowing that the larger degree trend was down? Well, you'd probably have avoided them. So by avoiding these sell setups here, instantly you would have avoided the first -2 hour losses. So what would the question have been again when you come to these sell setups a bit later in the day? Well, because these sell setups were in the direction of the trend, remember the 15-minute trend was anticipating that the YM was going to decline yesterday, you'd have probably said, yes, I'd like to take this sell setup. Okay, it was a -1 hour loss. However, the second trade setup, which as we've seen as of close was plus 1.7 hour, would have again been in the direction of the trend. So if I put the risk reward on to yesterday's close, so plus 1.7 minus 1 actually means a plus 0.7 hour profit overall. So instantly you can see, by using the large degree trend on this particular day yesterday, you would have turned what was an otherwise losing day into a profitable day. Now there are other ways you can use the large degree trend. For example, here you could have said, because the 15-minute trend was down, you might have wanted to hold your short position overnight and now be still in this short position as the market now is down at these levels, and you see the profit is increasing nicely as well. But not only can the large degree trend help you avoid otherwise losing trades, as we've seen in this example earlier in the day yesterday, but it can also help you manage trades and actually look to run them further when they're in the direction of the large degree trend. So this is the biggest difference between what we call standard traders, who just simply use the STF color, and we have that on there to allow standard traders an easy, quick visual way to gauge the large degree trend. However, advanced traders know and understand that although the STF does a very good job, we can do a better job by using the 15-minute DPs as we had in this example here, because they're leading indicators. Remember, that resistance area was on the chart before the market even opened yesterday, and as you can see, it's now the very high of the day for you. So when you come back to then trading on the shorter term chart, you can look at it and say, well, I don't want to consider buy setups today because the 15-minute trend is down. I only want to look for sell setups. And that is a very good example of how to use the DP and WPTs on the 15-minute chart to help gauge the larger degree trend when you're trading the shorter term 3 and 5 minute charts.